But there's a digital transformation at play when it comes to Angel Broking. So let's talk about what are the plans going forward, how they're planning to ride this digital tide. We have with us Dinesh Thakkar, CMD at Angel Broking, joining in on the show right now. Dinesh, hi, good morning. Good to have you on the show. We were just looking at your March client base, and that's up a solid almost 10% on a month-on-month basis at over 4 million users. You're clearly seeing a very strong traction in customer acquisitions. Tell us a little bit more about the customer acquisition trends so far in the last 3 to 6 months. Which regions are you adding more customers in, geographies, and is the median age of customers now coming down as opposed to what it was earlier?
Thank you very much. If you see, broking industry for past decade was unable to grow because for multiple reasons. One, when in the start of the decade, we were unable to control inflation, and returns from equity were not great. And then started NBFC crisis and all that. But what changed the face of this industry was when this current government launched Digital India campaign. And Reliance Jio introduced a data package which were cheap and fast. That created lots of population who started using smartphone. So what we saw starting from 2016-17, there was a huge surge of customers coming through mobile platform. Because if you look at India, most of our population is in tier 3. So they don't have an access to market. And this is youth population. So fast forward, towards when this COVID phase started, already population was very comfortable using mobile phone and interest rate were down. So that created a big surge of this population coming from tier 2 and tier 3 and trying to experiment our market. From there, we saw a big surge, especially digital players. Now, if you see an incremental client base, almost digital top 5 brokers, which are digital, are having a 75% market share. So what we saw is that market shifting more towards digital players rather than traditional players. In fact, traditional players lost market share. They degrew in this last 6 quarters. And digital players saw a growth rate of customer base by around, say, more than 100%. And proportionately, we saw increase in our revenues and all that.
Sure. Dinesh, also COVID has only accelerated, digital transformation with 100% of your direct clients onboarded digitally. Wanted to understand how much is the use of AI, of ML, apps in the overall product designing now? New products which have been designed or perhaps in the process, if you could give us some light on that.
Sure. So COVID has been a catalyst and it has fast forwarded this way which we were expecting, because I think since years, India has been discussing about under penetration, and we saw influx point coming in as an inflation coming down, and digital natives started coming to our market. Now, when we talk about this digital native, it is very difficult to acquire them manually and serve them manually. So only way to serve them is using AI/ML. First, in 2017-18, we were very popular because of our advisory service. So we started using machine learning in advisory services first. That is where we recruited lots of data scientists and created an engine, advisory engine, which we called ARC. So that was integrated in our app. So what is important in this phase is, when we talk about digital broker, it does not mean just creating an app. It is about serving a customer, onboarding a customer, and using lots of AI/ML tools. Now, if I have to give advice to my 40 lakh customer, it is physically not possible to call them and advise them. I have to use lots of machine learning tools. So what we do, we create lots of profile of customers, around 150 to 200 profile. And whatever advisory we generate, we try to use machine learning and artificial intelligence to disseminate that information to customer. And again, it is a 360-degree loop, which comes back where we are able to understand what customers are using, what they are not using. In this age of digitization, everything has to be digital, everything has to be run through machine learning. Even acquisition of client that we do from different kinds of pin code, it depends. If you look at India, it appears to be one country, but if you look at across different regions, there's a different culture, different language, what they understand. So we use machine learning to understand which region this creative or this marketing campaign is running. So we try to align it creative wise as well as language wise to their preference so that they can understand. Not only that, we have Smart Money. That's an educational program that we run that is run in different vernacular languages. So it is able to identify a profile of a customer. It is able to show them an educational videos and all that based on their understanding about market. So this is where this whole industry has moved towards. Without AI ML, it is difficult to serve a customer, which we are acquiring like in big number. If you look at acquisition number, we used to acquire like around 10,000 customer a month. Now we acquire around 3 lakh customer a month. So to acquire and handle them, it has to be total based on machine learning. It cannot be done manually.
Morning, Mr. Thakkar. Nikunj also joining in. Good to have you back on ET now. So there are two things which have happened in the digital world, Mr. Thakkar. One, yields have come down. Whether you talked about the reliance, disruption in the digital world, well, there is a brokerage disruption which Zerodha has caused. So that is one part which is evident. But on the other hand, you got savings which are coming higher because you don't need the sub-broker model and a lot of savings are there. Where do you think things will balance out? Yields coming down versus cost going down?
See, if you look at digital model, first of all, this disruption has been happening because of digital players. And if you look at India, as I said, that tier 3 is almost like a biggest part of our India, which is almost like 55-60%. They never had an access to market. So they have started access to market because of this digital platform. Now, if you look at digital model, we are serving digitally. So incremental cost to serve an incremental customer is almost negligible. We have lots of operating levers. So when it comes to pricing, I think it has to be priced in such a way that we are able to satisfy that small ticket size that like our population is. But at the same time, because they are consuming our service digitally, our cost does not rise proportionately. So if you see last year, 6 quarters back, when we introduced the total digital model, our operating margin was actually, when we started, it was negative 75%. But as we progressed, as we acquired more customer, today as we speak, our operating margin in that flat fee brokerage is also around 45%. So what is important is that does a player has a scale? If he has a scale, definitely he can leverage that. So issue is that a digital player has to reach a scale where he's able to optimize his investment that he has done on technology. So overall, I feel that market is going towards consolidation. It is going towards top 5 player. And for them, margins are increasing. In fact, when you look at yield dropping now, because we are charging per order, yield is not actually now important. What is important? What kind of volumes we are generating at the same base.
Great point. My next question is that how much investment do you think on a periodic basis is required to keep the digital engine going? Because the digital platform, I'm sure, will require upgrades, platform changes. Those are expensive upgrades, are they?
As I said, that for you to reach a scale, for any player to reach a scale, there is an investment. There's investment in, there's an CapEx, there's an OpEx. So because one has to acquire that kind of mass where he's profitable. But once you become kind of profitable, then incremental cost on technology is not proportionate to increase in revenue that we get. That's the reason our margins expand. So the day we started like digitization of this all of our services, our OPM was negative 84%. Today, as we speak, although prices we have dropped almost by 65% to what traditionally we were charging, but our operating margin has just improved. So that clearly shows that incremental investment in technology after you reach the scale is far lower than the growth in revenue. So that's the beauty of digital model.
Are you consciously trying to move towards not just digital but being a platform company, because that's where I guess the real recognition and the real reward is? I mean, platforms and network effects today are getting rewarded, which means if you acquire a customer, you can advise the customer on buying a mutual fund, buying an insurance, and buying other products also. Is that where you're also headed?
Because that is right. See, once you become a digital player and you're offering good service on your app, and we are acquiring like almost like 3 lakh customer a month, that gives us a big opportunity to create a multifunctional app or a super app or a platform where we are able to serve other needs of the customer. So what happens once you have a kind of an like app which customer gets used to and he likes and loves that app, that same customer wants more services on the same app. If you look at millennials, they would not like to put lots of app on their mobile. If they're happy with one app, they would like to they would like to have more services from the same app. So Angel's aspiration is to become a fintech company. So that is most important for us. Step would be first, we wanted to grow market share in stockbroking. Now focus would be towards getting a market share in SIP. As I said, Angel has been always been for masses, tier 2, tier 3, and all people like who wants to invest small ticket size. So our aspiration are to serve this population. So when we are talking to serve this customer, it would be through SIP and all that. And plus, we would like to focus on third-party products like insurance, loans, and all that things. So focus is clearly from here where we are into just one service what we are providing. We have to go into multiple services on the same platform.
Okay, and give us a sense as to what your outlook is in terms of the milestones that the company is targeting in terms of acquisition, revenues, as well as profitability over the next few years.
Last quarter, we acquired almost more than 9 lakh customers. So we are confident that we'll be able to continue with this trend. With this industry growing at the rate of around 28-29%, and digital player almost having a 75% market share in this, and we are amongst that top 3 players. So our focus is clearly first to gain a market share in stockbroking, and that is where our aspiration is to be the leader in this industry. At the same time, we'll roll out lots of other services on the same app. Already we have 2 apps, which is Angel Broking and Angel B. But going forward, we would like to integrate this into one app so that it becomes easier for a user to use other services and buy other products on the same platform. So going forward, in next 2 quarters, our focus is to introduce mutual fund, insurance, and bank loans on our same app. And we are thinking about applying for AMC and all that so that we are able to serve customer in their passive investment kind of like approach. We believe in this market, mutual fund with active mutual fund are a bit costly. So there are lots of AI ML kind of like tools that we have built so that it can help customer to identify ETFs or go for smart beta products so that they're able to get a better return on their investments.
Now, I'm sure the street is curious to know, given that you had Prem Vatsa recently pick up stake in another digital payer of yours, 5paisa.com. Are you being approached by any PE players for stake? Are you in talks with anyone at the moment? Is that something that you'd look at even down the line?
See, currently we don't require capital. In fact, this industry is very asset-light that way. And approach, definitely being a digital player, there will be players who would approach us. But right now, we are not interested to raise capital because we have sufficient, very strong balance sheet to serve this aspiration that I spoke about.
So, Mr. Thakkar, you know, when I had the pleasure of meeting you for the first time and I met you, you had a very large sub-broker network. That was the model perhaps which gave you scale and reach. What happens to the sub-broker network? What happens to the cost which you had there? Will all that be passed now?
No, sub-broker network in India, it is needed. Because when we talk about lots of people, everybody is not digital savvy. Now, today, when I'm serving a customer who is millennial and all that, it is very easy for that person to onboard and serve him digitally. But if you look at population, which is like 35, 40 and beyond, they want some handholding. And they would like to use our services, but they want some assistance when they are doing that. So we have built lots of model for our sub-broker where they are able to help customer to onboard digitally, understand our mobile app, trade through that. But at the same time, whenever they want, this customer wants any handholding or advisory from a sub-broker, they approach them. So it becomes very kind of like hybrid and good model for a customer who says, if I'm stuck, I'm trying to learn digital. But if I'm stuck, if I want to talk to any person, he can just pick up the phone and talk to that person. We are number one in sub-broking network today also. Although revenue which is coming from traditional broking plan has dropped from 50% of our total revenue to around 22%. That does not mean that base has reduced, but our digital growth has been like more than 150%. So growth in sub-broker model has been like 15-20%, and digital model is growing at the rate of more than 100%. So what we see, there is a need of this model in a country like India, where there are lots of value-added services being provided by a person who is like a point of contact for customers who are not very digital savvy. So that will flourish together. But big growth is coming from digital side.
People are watching the interview, Mr. Thakkar. The stocks are 5%. When we started the interview, it was up 2, so 3% in 10-15 minutes. People are reacting to what you were indicating about your business. Okay, to wrap it up, since you're a listed company now, how should one compare? What would be the parallel in which we should be comparing Angel's model with others? Are there any global benchmarks? Because the minute you say platform and digital, the P multiple changes. The minute you say brokerage, the P multiple changes. What is the right comparison for you?
See, currently, unfortunately, India does not have more digital players listed. So market will discover what kind of pricing or valuation should be given. It is in the process of discovery, I would say. To give any comparison would be like trying to nudge you towards saying that what kind of valuation Angel deserves. But I would say it is better market discovers within that the own process. But I believe that lots of digital players would get listed on our market. And that would be a kind of like right period where we'll be able to understand what kind of valuation a digital player should get in India. See, India has a big growth in digital side. If you look at rural population, it's a big population. And if you look at that population, they are young. They are able to use mobile. And they want all the services on mobile. So I am seeing a big kind of like future for all digital players. That's the reason I'm very kind of bullish about IT and digital players.
I really appreciate the time, Mr. Thakkar. Hope to see much more of you going forward, and pleasure to have you on the show.
Sure. Pleasure is mine. Thank you.